on the screen. I'm just going to go to task 4. This Synoptic is one of the most difficult exams at level 3. Typically, students have done really well in their costing paper, love that. Then they get to the Synoptic, and there's 2 things that happen. One is you can be tested on anything that you've done before, so you're not just preparing for one topic. All the topics at level 3 can come up, and you're having to do a whole lot more writing than you've done previously. So those 2 things become a difficulty for a lot of students. You have great resources. I saw in that video, Napreet gave a shout out to the Lifetime Learning Portal. On there, you will have the examiner's report for every exam. The examiner's report says which tasks people do well at, which tasks people struggle with. I've chosen to look at a couple of task 4s because that is the lowest performing task in this exam, according to the examiner and according to our experience as well. So we'll try and get through a couple of task 4 questions. This material is First Intuition's material. So if you came to study with us, you'd be working through this type of material on a regular basis. So we would look at in the Advanced Synoptic ethics. That's kind of the big new bit of testing above what we'd have done in the technical papers. This task is about financial accounts preparation. So in this, we will look at accounts for sole traders, look at accounts of partnerships and limited companies. So we've got 3 different types of business organisation, but also it talks about the ethical principles. One of the things with this exam is you've actually got reference material. I've got the reference material ready to go and look at. That comes as a pop-up. So whilst you should learn the ethical principles and the threats to the ethical principles and our reaction process if we think we've got an ethical issue in the workplace, it's all there for you. So knowing it ahead of time is brilliant. Knowing how to reference it in an exam will be a key thing to be able to do. So given the fact we're looking at ethics, we're looking at final accounts prep, potentially for different business types. Let's have a look at our revision example 1 from the First Intuition materials. So it tells us here that we are working for Steve Lynn, who is a partner at a company called Dervish Co. So that is the firm that we are employed by. Our position in the firm is, well, we're perhaps a trainee, maybe junior level member of staff. We are not the boss. Steve Lynn is the partner, and he's the partner for a particular client, that client being a Renegade PLC. So they want to become a company listed on the stock exchange. There's going to be different regulations for the stock exchange there. Then we're going to talk to investors. And when they talk to those investors, they want to encourage firms and individuals to buy the shares. So this is the first time that the shares will be publicly traded. Anyone, including your nan, can buy the shares. And we want to make sure, the regulations of the stock market make sure those people are protected. And they'd like you to speak at the meeting with those potential investors to say what a good investment they are. Now that sounds like quite a privilege. We can put our best suit on and go out and make a name for ourselves. But I want people to perhaps pop something in the chat there to say, why might that be a problem? Then the third little bullet we've got here is they want to have their audit completed before they go to the stock exchange to be listed. Listed means you can sell the shares to members of the public, and the stock exchange will trade your shares. The report must be unqualified. So actually, the auditor writes the report for the shareholders. The directors have told us how that report's got to look. That sounds like a challenge to our objectivity, our independence. You've done your job diligently, and you've found some major errors in those accounts, and the errors overstate the profits of the business. So the account should show a true and fair view of the business. the profits are too good, don't reflect the underlying transactions, and that's going to cause you a problem. They've said no change. We're not going to budge. Those are the numbers we want to report to the shareholders. And they've said, if you as the auditor don't toe the line, don't give us that unqualified report, we'll find a new firm. So hopefully people can pop in the chat for you, Jaden, the type of issues that we might be seeing there with the client behavior. So Renegade is the client, and you work for an accountancy practice called Dervish Limited. So I'm going to pop over the page, see what we have as questions. It says there, what action should you take? Well, there are two issues we've got here. We've got the change to the accounts, and we've got speaking at the meeting. So let's start with speaking at the meeting. And it does sound like a great opportunity, but there is an issue. We need to be independent, and people need to trust our independence or objectivity when we produce the financial statements, or when we, in fact, in this case, we audit the financial statement. So speaking at the meeting, we would need to say no. We must decline the opportunity. As it will compromise our independence. Will people believe us when we give an opinion on a company, a client, when we stood up and said, look how great this client is, you must invest in this business? So there's the first piece. We'll see what kind of threat that would be. The second issue we've got is about changing the results, or those changes to the accounts, where we say there are major errors and the client refuses to change. Now I'm going to struggle with space here. As I said, the reference material is going to help us. In the reference material, there is a process for dealing with conflicts and threats to our ethics. So I've called up the reference material. Hopefully, Jaden, you can see that my screen has changed. If I go back to the start of this material, this will be a pop-up in the exam. Reference material, this is straight from AAT. It talks there about your code of conduct, or your code of ethics, and the fundamental principles. And because I know this quite well, I know that it's 100.19, where it talks about ethical conflict resolution. That's the situation we're in. We know the right thing to do. That's to make the changes to remove those major errors to correctly state profit. The client doesn't agree. Now, the AAT have kindly given us a process for resolving these issues. One thing they say is to record the relevant facts. So we need to know what the facts are. Then we need to know what the ethical issues are. Those issues will be related to our fundamental principles, ethical principles, which we'll talk about shortly. Then we've got the fundamental principles. and the internal procedures. So I need to better remember things. And the older I get, the more I struggle to remember things. So I like a mnemonic. So we start there with F for facts. We put I for issues. These things, these fundamental principles and our internal procedures, they're what we should do. They are what I would call the norms. So I think about the facts, I think about the issues. I relate those issues back to the norms. When it was good, what did we say we should do? Next, it tells us to think about the
Hi, Andrew. Sorry, just really quickly. Sorry. We did get a question in, not necessarily in relation, but someone was asking, can you copy the reference material in your exam? Like,
I don't believe you can. You can't just copy and paste it. What you can do is move, you can have it as a pop-up and you can type it back out.
Yeah, I think that's what they meant. Can you have it?
Yeah, it's not a copy and paste, but yeah, if you want to say, I've got a question that asks me to define what objectivity is, you've got a definition of objectivity. I would use that, and that kind of reflects the real world, because in the real world we can look at the reference material. So yeah, absolutely, take advantage of it. Yeah.
All right, perfect. Many thanks.
Yeah. So you don't need to learn it off by heart, but if you know where to go, it'll be quicker in the exam to go and find it. So I've got Fin A, B, A, sorry, I need a B. Now the B I bring in myself, which is the best. I found out the alternatives. I've considered those alternatives against the norms and worked out what's the best. Remember, the I was for issues and the F is for facts. So in a situation such as this, where the client won't agree and where you're concerned that the partner will compromise the position, you want to think, let's go and write these facts down. What is really happening? And then it also tells us in these notes that we can consult with an appropriate person. Actually, a good person to consult with would be somebody in your firm or your employing organization. Might have an ethics officer or a partner with responsibility for ethics. But we might also consult with the AAT helpline. If I was doing an AAT exam, I think I might make a reference to the AAT helpline. So the last piece we've got there is to consult. Now, this gives me the mnemonic FIN ABC. FIN is easy for me to remember because I've worked in finance. ABC is the start of the alphabet, and I've learned it all the way through the first three letters. And we've got the reference material here. So what does our person in the scenario need to do? They need to go through that resolution process. What action should they take? They should take time to write down the facts. That have happened. Now, the facts are that the client doesn't want to budge on these accounting changes that we know they should. So write down the facts so far. We're going to keep that up to date. But actually, the client, perhaps they haven't quite realized the severity of this. So we would discuss with the client. The need to make those changes. That's really important. If the client says yes, then we don't have an issue anymore. Everything's fine. If the client says no, we're going to discuss with the partner. Now, somebody's carefully written this material, so let's let them know we spotted the partner. It's called Steve Lynn. We'll discuss with the partner. If the partner doesn't agree, then we have a further problem. So if the partner is willing to go along with the client, then we've got a problem. There is something that is not right here. And considering the facts, the client is misstating their financial statements. The partner is agreeing with that. The issue that is lacks integrity. We'll come to that in a moment. The norms are we should act in line with the ethics. So this lack of integrity is a problem against our norms. What are the alternatives? Well, the alternatives to go along with the misstatement, or to actually say this is not right and disassociate ourselves with the transaction or with the situation. Should be yourself, ourself from the situation, which may mean actually we need to resign. That is the last resort. Now, of course, in there we could talk to the AAT. That would be our consult. So space was difficult here, so I apologise, but we've gone through what are the facts, what are the issues. We've given both parties, the client and our partner, the opportunity to do the right thing. And if it comes to it, we will do the right thing. But we'll check with the AAT, talk to their hotline and see how that's, see what their take is here. Then it talks about 3 fundamental principles that would be breached. So again, this is in the reference material. And in the reference material, it is section 100.5. I haven't learned that off by heart. I did have a little sneak peek before, but let's go to 100.5 and see what our ethical principles are. So it tells us here, integrity, straightforward and honest in all our professional and business relationships. Objectivity, simple definition of objectivity is no bias. We're unbiased. We don't favour one person over another. We are not unduly influenced by others. We will not override our professional judgment based on pressure or our familiarity with other people. Professional competence, due care. We know what to do. We've got the skills to do a particular job. We don't take on a job if we haven't got the training. Due care means we've got the time to do the job as well. So those 2 pieces of professional competence and due care. The skills, don't work outside your skills. Due care, we've got the time to do the job properly. So we act diligently, put in the proper work to do the job to the right quality, the highest standard. Confidentiality, and this is a legal requirement and an ethical requirement. Anything we acquire in terms of knowledge or information as a result of a professional business relationship stays within that business relationship, not disclosed beyond that business relationship to any third parties, unless we've got prior specific authority. So the client says you can tell other people, or we've got a legal or professional right or duty to disclose. Now, at this stage, hopefully, the people who are online are saying that's about money laundering. Money laundering, absolutely. Other breaches of the law, we would have a duty to disclose if somebody's committing fraud that would be a duty to disclose. But money laundering is very important for this paper as a concept. And then professional behaviour. So professional behaviour, I always tell my students, works at 2 levels. Level 1 of professional behaviour is that we comply with all the laws and regulations relevant to our business. And then number 2 for professional behaviour is we don't do anything that would bring the profession into disrepute. So perhaps the students, people online could pop in which of the 3 were out of the 3 that might be breached in this situation. Which of the ones are under threat of being breached. So while people have a little type, looking back here, I would think professional competence and due care. I'm going to look at this from the negative way. Which aren't in question? Well, professional competence and due care says we lack the skills. The person you are acting in this scenario has the skills. They have spotted the major errors and they've raised that. So we've got the skills. That's not a problem. The person in this situation has discussed it with the client, and we will discuss it with the partner. That is entirely appropriate. That is all within the business relationship. So there is no issue with confidentiality. So by deduction, by eliminating those, the issues we have are integrity. They are misstating the financial statements. That's not straightforward and honest. Objectivity. Well, we wouldn't sign this off for anybody else because we would do the right thing. There's a potential bias due to pressure from the client. So objectivity is threatened. And professional behaviour, we are potentially bringing the profession into disrepute by waving through some major errors and therefore supporting misleading financial statements. So we can go back here and say, and hopefully, Jane, you have in the chat there a number of people who said integrity, objectivity.
So we did. Oh, no, sorry. Just very quickly. Yeah, no, go ahead. Yeah.
And professional behaviour.
Yes, we do have someone here. Ishmael has said those exact same words: integrity, objectivity, and professional behaviour.
Yeah, thank you. I took my time over that to show you not just where the reference material is, but also 2 ways of looking at this. We can go directly and say, what are the things that I think are a problem? Or we can go negatively and eliminate the ones that aren't an issue. And doing both in the exam would be good. That just makes sure we're kept on track. Ethical threats then. Again, we've got reference material for this. That reference material is 100.12. Now, I've learned these off by heart because I teach this stuff very regularly. And let's have a look at the reference material. Threats and safeguards. We've got self-interest threat, where a financial or other interest inappropriately influences our judgment or behaviour. There's an issue there because the client has said, if you don't do this, I'll find somebody else. The partnership, Dervish, will lose some fee income. So I think we've got an issue with self-interest. Self-review threat is where you look at your own work. So we've perhaps produced the financial accounts for a client and we've audited those accounts. If we're looking at our own work, we are less likely to spot the problems. We're also less likely to report the problems. We're not being asked to do that here. We're just producing the audit and we've spotted some problems. So there's no self-review threat here. Advocacy threat. Now, this occurs when a member promotes the position or opinion of the other party, the client, to the point where subsequent objectivity may be compromised. So that investors meeting, we're standing up and saying, this is a great business. You should buy shares in this business. Well, that makes us an advocate of the company. We're promoting the company, and therefore we lose our objectivity, which we talked about a little bit in the previous part of the question. Then familiarity threats. When we know people for a long time, we tend to become sympathetic to their interests. We also we reduce our professional skepticism. We reduce our vigilance, because we think, I know this person, I can't believe they would ever do anything wrong. And we must maintain professional skepticism, a questioning mind. And we stop doing that when we know people for a long time. That doesn't appear to be a problem, but intimidation does appear to be a problem. Now, in accountancy world, intimidation is very rarely that somebody will take a baseball bat to us. But the fact that they're going to take away the work and find somebody else who will sign it off, that is an issue. So here we have a self-interest threat. We have an intimidation threat. Those two are clearly related. And both of those are about the fee income. If you're running an accountancy practice, you want to build up your client base and earn lots of fee income. You don't want to lose clients without a good reason. So those two things, I'll find somebody else, works as a self-interest and intimidation. And then advocacy. Advocacy is where we've stepped into somebody else's position, spoken strongly for that position, and subsequently our objectivity or independence is compromised. Advocacy tends to be one that students find hardest to grasp on a regular basis. So over the page, if there are any questions there, just the students pop them in, and you can stop me and make a comment there. The question goes on. You've received the following email from one of your clients. Use the template to respond to Sue's questions. So some help and advice Sue would like. And she said she's heard that financial statements are different for limited companies. That difference must be versus sole traders. And in your advanced bookkeeping and your financial statements, preparing financial statements papers, you'll have done the accounts for sole traders and partnerships. Level 4, we start to do the accounts for limited companies. But at level 3, we learn about the legal differences and a bit about the theoretical differences there. So she wants us to explain the differences. She also talks about the accruals concept. So she's not sure what that is. So there we've got a bit of a definition. But remember, we're speaking to somebody who is not an accountant, and the adjustments made to apply that concept. So there we'd have learned that in preparing financial statements paper, how we would perhaps make an adjustment there. Provide some examples. Well, we'll just have a quick look at one example. And the difference between the financial statement of financial position and the statement of profit or loss. Now, time is galloping away, so let's have a quick look. Now, I struggled with the space just now, so I've created a bit more space for this. Let's think about statement of financial statements are different for limited companies. So why are they different? Different due to the ownership structure. Sole trader, the sole trader entity is owned by the manager. So the person who runs the business, makes all the decisions in the business, is the person who owns the business. Their assets are on the line. Limited company is owned by shareholders who are separate from the managers. Now, this creates a whole number of things. We don't have time to write all that. We don't have enough marks to justify writing all of that. But companies are regulated by the Companies Act. And International Accounting Standard 1 states the format of their financial statements. So how are they different? It is more formal and a prescribed format. So here we've not written in full sentences, and I wouldn't use those abbreviations that we've used up above there. So I used FT for sole trader, I think. Prescribed format for limited companies. Greater formality. There is also different terminology. The proprietor's interest in a sole trader is capital plus profits minus drawings and LTD. It is called equity. And includes share capital and retained profit. So what is different? Formality, the statements that need to be included, and some of the terminology. So we've put together an answer there. The accruals concept, I always tell my students the accruals concept is also known as the matching principle. That really helps me to be able to get the right kind of answer going here. So the question said, explain what the accruals concept is and give me some examples of the adjustments that would need to be made. Always make sure you've got the requirement firmly in your mind before you write your answer. So this concept is also known as the matching principle. Not sure why today my pen is acting slightly erratically. So it's the matching principle. It requires us to match revenues and costs in the period to which they relate. The alternative is the cash basis. So let's say to Sue, this may be different. To the period when cash was received by the business for sales, as an example. Now, we might talk about the fact that we recognize the sale straight away. We don't wait for, as soon as we raise the invoice, we don't wait for the customer or the client to pay us to recognize the sale. But that's not, in my mind, an adjustment. An adjustment for me would be where we are accruing expense. And my favorite example of that is for a utility bill. So, for example, at the year end, we would recognize the expense for the final month's electricity. Even if we have not yet received the supplier's invoice. So we would create a liability and recognize an expense. So hopefully, Sue now recognizes that for electricity, we want 12 months of electricity expense in there, 12 months that relate to the statement of profit and loss period, not necessarily the invoices that we've received already from the supplier. So the last bit we'll look at now, last part of this task, is the difference between the statement of financial position and the statement of profit or loss. So this links back, and we might have used the terms statement of financial position, statement of profit or loss in the answer to the first part of this question. So what is the difference between the statement of financial position, the statement of profit or loss? Well, the clues are in the title. Back when I studied, and probably some of the colleagues, people in this meeting will talk about the balance sheet instead of the statement of financial position. I think the statement of financial position is much better because it tells us what actually the statement is about. It doesn't just tell us it balances, but tells us what it shows. So I'm going to use my abbreviation SOFP. SOFP shows a snapshot of the financial position of the business at a point in time. So as if we'd taken a photograph of the business at a point in time, purely from a financial point of view. So it's on a particular date, just like a photograph is on a particular date. This position will include assets, which is the things owned by the business, and it is at the reporting date. Remember, it's a snapshot on a day, just like a wedding photograph is a snapshot on a day. It will also show the liabilities at that date. These are the financial obligations of the business. Such as payments to be made, to suppliers. Now, there's an accounting equation which you'll have learned about: assets minus liabilities equal equity. So the net of these two positions, net of assets, which are a debit, and liabilities, which are a credit, is the owner's residual interest in the business which is the value of their investment. So we don't have time to do too much more. Let's just recognise the fact that we haven't answered all the questions. I've done the financial position, profit or loss. So the financial position was at a point in time. Statement of profit or loss, well, that is a performance statement. which shows the results of trading activities or business operations in the reporting period. So as a contrast, a statement of financial position is a snapshot. This covers a period of time. So that is usually 12 months to the reporting date. This statement will show revenue from sales made to customers this will be matched. And that accruals principle just now, that'll be matched to the cost of sales, cost of making those sales. That's why it's called cost of sales. As we think down the statement of financial profit or loss. And the administration and finance costs. For the reporting period. So key contrasts here, which we've tried to capture there. Statement of financial position is a snapshot at a point in time, shows assets and liabilities. Statement of profit or loss is a performance statement. It represents a period of time, 12 months typically, and the benefits of the business of that, the revenue of trading, offset against the cost, matched for the cost of the same activity, and shows us how we performed operating our business to attempt to make a profit. So we are just short of when people, I guess, need to go back to work. Thank you very much for joining us. I'm not sure, Jaden, if we've got any questions that have popped up there, or how we're going.
Hey, no, sorry. I just think everyone was fully engrossed. No questions that I can see that's in relation to the session. Someone did ask a question, but I answered it. But yeah, no, overall,
Good.
Very good.
One of the tips there is you've got to be on your technical stuff. So the things you've covered on previous papers will come up and be examined. And that reference material, I would make sure I've read over that a couple of times before I go into the exam.
Yep.
There's a particular area around dealing with tax issues, which I don't think I could ever memorize. So I would learn where that is and make sure I could go and reference it in the exam. One key tip there is use that reference material to help you with your writing in the ethical part. So hopefully everybody found that helpful. And I'll hand back over to you, Jaden, to do the final mop up there.
Perfect. All right. Thank you very much, Andrew. And thanks everyone for joining us. So thanks for being a part of the Facebook Live. Do remember that these sessions are recorded, so you will be able to rewatch this live in the case that you missed something, or if you just want to watch it again. Of course, for additional content, I'd say follow us on Facebook if you haven't already. We're on Twitter, we're on LinkedIn, we're on Instagram, and you guessed it, we're on Threads as well. So check us out on Threads. That's at Your AAT. We're also on TikTok. Follow us on all those socials if you haven't already. Have a good one. Thank you again for joining, and we'll see you soon. Bye for now.